Select 50 Fund Focus. I'm joined today by Sashi Reddy, who's the co-manager of the Stewart Investors Asia Pacific Leaders Fund. Sashi, thanks very much for coming in today.
Thank you for having us.
So maybe we'll start with the name of the fund. I mean, Asia Pacific, obvious, but leaders. I mean, what does that tell us about the types of companies maybe you're interested in investing in?
The Leaders Fund specifically focuses on larger companies. The way we define it specifically would be companies that have a free float in excess of $1.5 billion, and companies that are contributing to and benefit from the development of the Asia Pacific region.
Right. Okay. And how would you define that region? Including Japan, excluding Japan, Australia?
This is excluding Japan, but it includes Australia.
Right. Okay. And in terms of your investment approach, then you talked about the types of companies. They're leaders. They're benefiting from the development of the region. Maybe you could just talk a bit about your approach to finding those companies. How do you go about it?
Sure. So I think it's useful to talk a little bit about our investment philosophy. So the philosophy itself was drafted by Angus Tulloch, the founder of our business, almost 30 years ago. I think he launched his first Asia Pacific fund back in 1988. So it's 30 years as of this year. Some of the basic tenets of the philosophy itself are a focus on stewardship. We are looking for stewardship in the companies we invest in. It's an absolute return mindset. We genuinely believe that the best way to deliver long-term sound risk-adjusted long-term returns is by ignoring the benchmark. So we're very bottom-up, and all we try and do is try and buy the best 30 or 40 companies that we could own for clients.
Can I just pick you up there on stewardship? What do you mean by stewardship?
Stewardship simply means, it could mean many things, but for us it means owners of businesses or people who run businesses who behave like owners, who think about business in a long-term fashion, who invest or who look after all stakeholders in a business. So there's often a belief that shareholders come first. That's what capitalism teaches you, or that's what Finance 101 teaches us, at least in universities. But we genuinely believe that if you don't look after all stakeholders in a business in the long term, it might come back to hurt shareholders. So just to give you an example, if you're not paying the appropriate amount of taxes to the government, or if you're not looking after your suppliers well, you're not paying them on time, or if you're not treating your employees well, these are signs in many ways that the quality of management is quite poor, or the time horizons are quite short. And it also tells you that if you can mistreat one stakeholder, there is no reason why that person or that management would not treat minority shareholders poorly in the long term. So in a way, for us, it's good evidence of quality of management, and that's something we hold very dear. We always say we invest in quality companies, and what do we mean by quality? Quality for us is, of course, quality of franchise has to be strong. There are ways we define quality of franchise. Quality of financials is simply a way to understand quality of franchise, but also quality of management. And quality of management is, we can define it in many ways, but the three simple ways of looking at quality of management is competence. People have to be competent to build strong businesses. Integrity, we think that's very important, not just in emerging markets, in any market. We want people to build businesses the right way and not cut corners. And humility. Humility is also quite important, partly because we're all human, we all make mistakes, and if managements don't have the humility to accept that they made a mistake, it's very difficult to correct them.
So Sashi, another word that's often associated with this fund is sustainability. So what does that mean to you?
For us, sustainability is simply long-term investing. It's about investing in companies, as I said earlier, companies which look after all its stakeholders. That's step one. But most importantly, sustainability also means investing in products and services that have a positive impact on society long term, that help development in the right way. So it's a very broad definition. It's not necessarily, we're not an SRI fund, or we're not a green fund. We don't have any negative screens. We don't call ourselves ethical investors or any of those things. For us, it's simply one, picking good quality managements that are quite long term and treat all stakeholders equally and fairly, and also companies that deliver products and services which we think are important for society's development long term.
So this is a very distinctive investment approach. Does it lead you into certain parts of the region, to certain different countries or different sectors
Sure.
In particular?
It does. We say we don't have a negative screen, but it's easy for us to look at, say, a tobacco company and say, what is the purpose of a tobacco company in society? If anything, the lots of very poor health outcomes of investing in a tobacco company are some of those risks on the balance sheet of these companies. We think not. So we naturally go and look for companies which drive positive outcomes in terms of development.
Okay. Now, if I look at the top 10 holdings of your fund, what jumps out at me is that the biggest economy in the region is not represented. There's no Chinese company there. Why is that?
There is a lot of Chinese investment in our portfolio. It's just that we don't have any direct investments in China as of now. If I'm pretty sure if we meet 5 years from now, there will be a few companies in that list. There are various reasons for that. One, a lot of these Chinese companies have short histories, 10 or 20 years mostly, and it's pretty much mostly first generation. And our investment process relies a fair bit on understanding histories of businesses and track records and things like that for various reasons. But mostly we always try to look at companies and how they behave during times of stress. Usually the strength of character of people and also the strength of franchise comes through quite well. We don't have enough histories with most Chinese companies. That's not to say that they're not good. It's just that we need to see them through a cycle as much as anything else. So that's one reason why we don't have lots of direct Chinese investments. But if you look at the portfolio through the lens of economic exposure, we estimate roughly 15%, give or take a few percent, would be exposed to China directly. There are lots of examples of companies which we own, which are not listed in China, but probably Hong Kong or Taiwan or Japan or other parts of the world, which are growing quite quickly in China. And we like that to some extent because we think it's more risk aware.
So what you've described is a fund which is really focused on quality, long-term sustainability. Would you describe it as quite a defensive fund? And I wonder how that follows through into short-term performance. Because if I look at the short-term performance over the last couple of years, you've really lagged the market. Is that a reflection of the defensiveness of the fund, do you think?
Yeah, I always get confused with what defensive really means. Our style or our aim is to preserve capital as well as grow capital in the long term. And it's an absolute return mindset. There'll always be periods when we do lag the market. It doesn't worry us. The way I think about it, or the way we think about it on the team, is the funds have gone up, I think on average 15% a year for the last 2 years. I think that's quite good absolute returns. Yes, there's an index out there which has gone up much more, but there'll be periods when the index falls, or there'll be periods when we do better than the index. These things don't ultimately matter much to us. What really would worry us is that over a 5 or 10 year period, if we do not deliver good absolute returns, which means we should be questioned by our clients. But the way our investment style and process leads itself into protecting more capital on the way down. When markets are rising very fast, we would consider ourselves very lucky to keep up with them.
Okay, Sashi, some fascinating insights there into what's a very interesting fund. Thank you very much for your time.
Thank you so much for your time, and thanks for having me here.
Thank you. If you'd like to find out more about the Stewart Investors Asia Pacific Leaders Fund, then there's lots more information elsewhere on the website, so please take a look. Thank you.